If you're starting late with investing, here's something most advice gets wrong right away. Late investors don't need more aggressive strategies. They need a different order of priorities. Most financial content tells you to take more risk to catch up. But that logic was designed for people with decades of time. When you start later, the rules change. The real edge isn't speed, it's protection, simplicity, and staying invested long enough for compounding to work. That's the core idea behind this channel. Before we continue, a quick note. This is educational content only, not financial advice. I'm not a financial advisor. Always do your own research before making investment decisions. Now let's break this down calmly. Late investing isn't about chasing maximum returns. It's about avoiding the mistakes that permanently set you back. Younger investors can recover from big drawdowns, emotional decisions, and bad timing because time smooths those mistakes out. Late investors don't have that buffer, which means the biggest risk isn't the market itself, it's behavior, panic, overcomplication, switching strategies at the wrong time. This is why the late investor approach flips the order most people follow. Instead of growth first, we start with protection. Protection means avoiding strategies you can't emotionally stick with. It means prioritizing stability, diversification, and clarity before chasing higher returns. Once protection is in place, simplicity comes next. Complexity feels sophisticated, but it often creates confusion and hesitation. Fewer moving parts make it easier to stay consistent, especially during downturns. Growth comes last, layered on top of a foundation you can actually maintain. This order matters. When the order is wrong, investors abandon their plans. When the order is right, they stay invested. And staying invested is what builds wealth over time. Many people starting later carry quiet regret. They compare themselves to people who started earlier and feel pressure to make up for lost time. That pressure leads to rushed decisions. Rushed decisions lead to losses that have nothing to do with the market and everything to do with emotion. Starting late isn't failure. It's a different strategic situation, one that requires calmer thinking, clearer rules, and realistic expectations. This channel exists to give late investors something most finance content doesn't: a strategy built around real life, real emotions, and long-term consistency. No hype, no urgency, no shortcuts. Just a repeatable approach focused on protection first, simplicity second, and growth last. Wealth isn't built by doing everything fast. It's built by staying invested long enough for time to do its quiet work. Even when you start later, that still applies. So if you're starting late, take a breath. You don't need to catch up overnight. You need a strategy designed for where you are now. And that's exactly what we build here.